Hello everyone, welcome to the market opening bell for Monday, January 19th, your 10-minute guide to the stock market. Hong Kong stocks opened higher on Friday but later retreated. The Hang Seng Index opened up 171 points at 27,094, climbed as much as 252 points to 27,176 shortly after the open, then reversed and fell as much as 182 points to 26,741 near the close. It finished down 78 points or 0.3% at 26,844, with turnover slightly reduced to 255 billion Hong Kong dollars. The Hang Seng Tech Index closed at 5,822, down 6 points or 0.1%. The share index fell 46 points or 0.5% to 9,220. Southbound funds recorded a net inflow of 93.58 million Hong Kong dollars into Hong Kong stocks, with net buying of SMIC at 1.084 billion, Xiaomi 867 million, Hua Hong Semiconductor 585 million, Mart 141 million, and Sanhua Intelligent Controls 129 million, while net selling China Mobile at 1.074 billion, Alibaba Health 461 million, and CNOOC 108 million. Statistics show Southbound funds have net bought Tencent for 8 consecutive days, totaling 9.684 billion. Net bought Alibaba for 5 consecutive days, totaling 4.424 billion, and net sold China Mobile for 10 consecutive days, totaling 8.062 billion. For the week, the Hang Seng Index rose 613 points or 2.3%. The X-share index gained 0.2% and the Tech Index rose 2.4%. Technically, the Hang Seng Index remains clearly kept by resistance at 27,200. With turnover declining, upside momentum has weakened and the index may fill last Tuesday's upside gap of 121 points between 26,608 and 26,729. The 10-day moving average is currently around 26,610. A break below this level would target next support at 26,200. Mainland A shares opened higher but closed lower amid volatile trading, with all 3 major indexes ending in the red. The Shanghai Composite rose as much as 27 points or 0.7% to 4,140 early on before coming under pressure, briefly dipping below 4,100 and hitting a low of 4,091, down 20 points or 0.5%, then closing at 4,101, down 10 points or 0.3%. The Shenzhen Component Index climbed as much as 117 points or 0.8% to 14,424, then weakened and fell as much as 49 points to 14,257, closing at 14,281, down 25 points or 0.2%. The Chinex Index closed at 3,361, down 6 points or 0.2%. Total A-share turnover reached 3.0262 trillion yuan, an increase of 120.7 billion yuan from the previous day's 2.9055 trillion yuan. For the week, the Shanghai Composite fell 18 points or 0.45%. The Shenzhen Component rose 1.1% and the Chinex gained 1%. The PBOC is not expected to cut the loan prime rate this week, though the probability of rate cuts or RRR reductions in the first quarter of 2026 is relatively high. PBOC officials have stated there's still room for RRR and rate cuts this year. Today, China will release GDP and the Troika data. Forecasts are Q4 2025 GDP year-on-year up 4.5% versus previous gain of 4.8%. Full year 2025 GDP year-on-year growth of 5%. December retail sales year-on-year expected up 1.1% versus previous up 1.3%. December industrial production year-on-year expected up 5.5% versus previous up 4.8%. Full-year fixed asset investment year-on-year expected to drop 3.1% versus previous dropping 2.6%. And December surveyed urban unemployment rate 5.2% versus previous 5.1%. In Hong Kong, the state grid plans are 4 trillion yuan in fixed asset investment during the 15th five-year plan period to drive high-quality development of the new power system industry chain through expanded effective investment, roughly 40% higher than the original 14th five-year plan target of 2.23 trillion yuan and the actual spending of around 3 trillion yuan. Harbin Electric rose 5.8% and Oriental Electric rose 4.9%. Reports indicate CK Hutchison is aiming for a Watson's listing in Hong Kong and London as early as the second quarter, targeting a $30 billion valuation and planning to raise $2 billion. If successful, the valuation would exceed the figure currently used by investment banks when calculating CK Hutchison's 226 NAV. The stock rose 1.6% to 60.5 Hong Kong dollars. Maersk will resume Red Sea and Suez Canal routing for services from India and the Middle East to the U.S. East Coast. CMA CGM has already rerouted India subcontinent and Egypt to U.S. services via Suez. And Ocean Alliance has scheduled Europe-Asia eastbound and Mediterranean-Asia eastbound sailings to switch to Suez, starting this month and next month respectively. Return to these routes will increase capacity by 7 to 8%, putting downward pressure on freight rates, with forecasts calling for declines of 9 to 16% this year. Shipping stocks OOIL, Costco Shipping and SITC fell between 3 and 5%. Mart opened flat on Friday, but then declined sharply, dropping as much as 6.8% to $176.4, a near one-year low. A US-based NGO claims to have found evidence of worker exploitation at the mainland factory producing the popular Labubu dolls, alleging forced overtime, blank or incomplete contracts, and denial of paid leave at supplier Shunjia Toys, described as one of Mart's core production bases with over 4,500 workers. Mart stated it has noted the report details and will resolutely require rectification if the allegations are confirmed, adding that it conducts regular supply audits, including annual independent third-party reviews by internationally recognized agencies. Recent profit alerts include Conant Optical, expecting 2025 net profit to rise at least 30% year-on-year due to higher sales of 1.74 index lenses and multifunctional products, ongoing scale benefits and automation improvements, and optimized financing. TCL Electronics forecasting 2025 adjusted parent net profit of 2.35 to 2.57 billion, up 45 to 60% year-on-year from quality global growth, stronger profitability, and enhanced AI digital efficiency. Auntie Jenny anticipating 2025 profit of 495 to 525 million yuan, up 50 to 60% year-on-year from its multi-brand strategy, omni-channel operations, and continued store expansion. And Tianhong International Group projecting 2025 net profit up around 60% from 2024's 589 million yuan due to recovering orders, higher sales and capacity utilization, improved gross margins and sharply lower finance costs. U.S. markets will be closed today for Martin Luther King Jr. Day, Friday's session was choppy and slightly softer, with the VIX up 0.02 point or 0.1% to 15.86. The Dow down 83 points or 0.2% to 49,359. Nasdaq down 14 points or about 0.1% to 23,515. S&P 500 down 4 points or about 0.1% to 6,940, and the Nasdaq Golden Dragon China Index down 89 points or 1.1% to 7,720. Hong Kong ADR suggests the Hang Seng will open Monday down 204 points at 26,641. For the week, the Dow fell 0.1%, S&P 500 fell 0.4%, and Nasdaq fell 0.7%. Chip stocks remained popular, with Micron up 7.8%. Nvidia down 0.4% after opening higher. TSMC up 0.2% and Intel down 2.8%. Other megatech stocks were mostly softer, with Apple down 1%, Alphabet down nearly 1%, Tesla down 0.2%, and Amazon up 0.4%. After recent record highs, investors took profits on gold, while easing geopolitical tensions reduced safe haven demand. Spot gold fell 0.4% to $4,596.1 per ounce, but still rose nearly 2% for the week. Spot silver fell 2.72% to $89.9079 per ounce, though gained 12.7% weekly. Oil recovered as markets assess supply risks, with NYMEX February crude up $0.25 or 0.4% to $59.44, weekly up 1.4%, and Brent March crude up $0.37 or 0.6% to $64.13, weekly up 2%. Notably, the U.S. government has announced 10% tariffs starting February 1st to 6 on Denmark for refusing to negotiate the sale of Greenland, and on 8 European countries supporting Denmark, including Norway, Sweden, France, and Germany, with threats to raise the rate to 25% in June if no agreement is reached. In response, Denmark and NATO allies have deployed additional troops, ships, and aircraft to Greenland. The uncertainty surrounding Greenland is expected to drive investors toward safe haven assets such as gold and silver. President Trump has expressed reservations about nominating Kevin Hassett, current National Economic Council Director, as next Fed chair. Hassett has been considered a leading candidate to succeed Powell. Trump prefers Hassett to remain in his current role, noting that his departure would deprive the administration of a highly influential economic voice. Following the comments, the probability of Fed Governor Waller becoming chair rose to 59%, now leading, while Hassett's odds fell to 14%. Bond yields rose sharply, with the 2-year Treasury yield up 5 basis points at one stage, reflecting reduced rate cut expectations and a stronger dollar rebound. Our stock pick today is AInnovation, stock code 2121. AInnovation is firmly positioned in the AI plus manufacturing sector. It has launched a comprehensive series of AI products and solutions that span the entire manufacturing value chain, building competitive moats across multiple dimensions, including technological innovation, product implementation, and scenario empowerment, establishing itself as one of China's leading AI technology companies, focused exclusively on manufacturing. According to the IDC report, China large model application market share 2024, the group ranks 7th in China's large model application market and is the only vendor focused on the industrial sector to make the ranking. The group adheres to its one model, one agent, two wings strategy, using the AInnoGC industrial large model as the foundation, AI agents as the core engine, and driving simultaneous advancement in both industrial robotics and industrial software applications. The group has completed another technical upgrade to the AInnovation industrial large model by adapting DeepSeek R1 distillation to the AInno75B model. This upgrade significantly improves the reasoning capabilities of AInno75B while preserving its strength in deep industrial knowledge, understanding, and low-cost private deployment. In addition, the group has launched a new AI agent development platform that enables customers to rapidly build and deploy large model-based intelligence solutions through visual, low-code methods. The platform has already been applied in areas such as equipment maintenance, intelligent analysis of production and manufacturing data, and smart manufacturing training. The group's ChatCAD generative industrial design software has taken a critical step from pilot testing to practical application. Its chat robot industrial embodied intelligence robotics technology stack is nearing maturity with capabilities for autonomous task planning and scheduling, autonomous perception, analysis, and decision-making. This forms a highly generalizable, widely applicable, and easily deployable industrial robot brain that supports one brain, multiple bodies, meaning it's compatible with a variety of robot hardware platforms. In industrial software, the group has entered a strategic partnership with Bentley Systems, the global renowned infrastructure engineering software company, to jointly develop next-generation intelligent infrastructure engineering software products and provide infrastructure professionals with AI-enhanced solutions such as ChatCAD. In industrial embodied intelligence, the group has established strategic partnerships with leading industry players, including KUKA, one of the world's top industrial robot manufacturers, and Kenan Robotics, a leader in service robots. The focus is on serving as the brain for robots across broad industrial scenarios and jointly advancing embodied intelligence applications in industry. In AI agent applications, the group has formed strategic cooperations with Alibaba, DingTalk, and Hanika to explore areas such as overseas deployment of financial solutions, enterprise asset digitization, and on-chain applications, while further deepening and expanding partnerships with leading enterprises like Advantech and China Resources Digital Technology in industrial agents. Recommendation: buy at $6.7, target $7.3, stop loss $6.3. I do not hold the above stock.